I think that the trade finance panel, which just took place, was really fascinating because I know very little about trade finance, and the fact that you can provide a financial service like that and have mostly no defaults is really cool. So here we're going to do an interview with Wilfried Verstraete, pronounced his name right, the CEO of Euler Hermes, which is a really big company that actually dedicates a lot of its energy to ensuring these types of trade risks. And so you have this different perspective where you have these fintechs that are creating an environment which is really managing and mitigating risk well, and then you have a company that is over 100 years old. I mean, this is really cool because I love to see these established firms that are evolving and adapting to the changing environment. And Euler Hermes is a company that actually it started in the United States, didn't it? There's some sort of so tell me a little bit about your company.
Indeed, one of the oldest company that we have in our group is the one in the United States, which is today 127 years old.
Wow, that's older than me.
And if I'm not mistaken, I think in France we must be now at 92 years. In Germany we are over 100 years old, and UK I think as well, 92 or 93, something like that. So almost a century around the world.
So you guys have been doing your business for a really long time, but the financial services industry is changing. We all know that. We all see that every single day. The digitization of finance is happening at an accelerated pace. This is a multi-decade transformation. And when you're running a big multi-billion-dollar company like you're doing, you're obviously aware of that. And so you, as a company and as a CEO, you've made a strategic decision to embrace innovation. And part of it's just due to the fact that your markets are kind of mature, right? So you've got to, it's like change or die sort of thing. But what was the genesis of this decision to really, accelerate your embrace of innovation, change in fintech?
The fundamental reason is that I strongly believe that change in business is not a straight line change.
Right.
Any business has, at one moment in time, a step change. And when I look back at our history, it is made of step changes. So you have a huge step change when you have to adapt your business to the changing environment. And then for a number of years, you have a much slower pace in change. So I am convinced that with the arrival of the digital revolution, or whatever you want to call it, we are facing a step change. And so for us, strategically, it was extremely important to be at the forefront of those changes in our businesses, because as we often say, we are the custodians of our business, and we have to make sure that Euler Hermes as a group is still around for the next 100 years.
Right, and so far so good. I mean, if you've been around for 120 whatever years, 27 years, you're an outlier, because most businesses don't last that long. I mean, that's reality. So you're in this step change with fintech, but you're also investing in new companies. And fairly recently you've invested in a couple companies. Can you share with these companies who they are and what they're doing and why you invested in them?
Well, first of all, it's important to note that we invest not with the sole purpose of having a financial return.
Okay.
Obviously, we don't want to lose money, so we are very cautious in what type of companies we do invest. But our first purpose is to invest in companies with whom we believe that we can have also a sound business relation. So we have two types of investments. We have one smaller fund, which invests in, I would say, early stage startups. And then we have a second fund, which is much bigger, which is $100 million currently, which is a joint venture of Euler Hermes and Allianz X, in which we invest in larger companies, in which we do believe we will have a sound business relationship for the future. So that's why we invested in companies like C2FO.
Okay.
And we currently have a lot of other investments in the pipeline that we're currently analyzing and evaluating for future investments. But for us, it was important as well that we create this momentum and that we're also available for any type of fintechs that can have a business proposal which is interesting for us and where we're willing to accompany them and to co-invest with them in their development.
So, are you targeting a specific sector? So the previous panel we were doing trade finance. You as a company, you understand that really, really well. So are you looking at like companies like this? I mean, so should these guys be hanging around here asking you for money afterwards to fund their Series B? Or is it some other type of vertical or fintech that you're looking to invest in, or it's kind of wide open?
It's relatively wide open. It's both early stage as also round Bs. No problem with that. It was very interesting in what I heard in the panel discussion, because a lot of the topics that they are addressing, a lot of the issues that they are addressing are also at the very heart of our own business. Because trade finance or trade in general has completely changed. I mean, it's a word that we don't use that much anymore today, but the globalization has indeed changed the way that people do business. We also see that traditional trade is moving more and more into, I would say, kind of platformization. The way that seller and buyers get in touch with each other has completely changed in the last years, and it will continue to change at a very fast pace. The times where you systematically have a physical person visiting you for prospecting has probably not entirely disappeared, but will gradually diminish. And so other forms of relationship building has emerged. That also means that from a trade perspective, the risk of non-payment in trade has also increased. And our mission as well is to ensure that people can get in touch with new buyers in new sectors, new segments, new countries, and still have a risk management that allows them to do those trades with a sound risk management tool behind it.
So excellent. So you mentioned something that I think was it's really cool, because you are not only changing as a company, but you're investing in innovative early stage companies, which is really risky, because face it, most early stage firms, they fail. And when you see big corp investing, you know, they need to go into that with eyes wide open. But part of the value here is you get to learn. It's you're embracing a culture of agility and risk-taking, which may or may not be intrinsic to your own culture. So that culture is just an important part of what you're doing, correct?
No, absolutely. And that's why we created almost 4 years now inside Euler Hermes what we call the digital agency.
Yes.
Which is a very specific department or a very specific unit, which is a little bit a standalone satellite to some extent with the rest of our organization, which, let's admit it, is still very old-fashioned hierarchical, although today everybody is talking about working in an agile way, etc. I mean, it's not that easy to change a 100-year company in that respect.
Yeah.
And so, but we're doing it. But the main difference from us with many of the startups is we have an existing business to run and we have an existing profitability to ensure. So that's why we decided to create this separate unit, which infuses, I would say, the more modern agility, the new ways of working, but also new concepts, new services, new ideas into the organization. And so far, it has been extremely successful.
Excellent. So you're creating new digital products in-house. So you're not just investing, but you're creating new products in-house. So what are some of those products that you have already developed or in development now?
Well, let me maybe first add, and it's interesting also what we heard in the previous panel session. Many of the startups that we meet have very interesting business ideas. They are extremely good at developing very attractive customer journeys. The look and feel, the way that they treat customers is probably much more advanced than many of the, I would say, well-established companies do. The major issue that they have is distribution. And you asked the question in the panel, how do you onboard clients, where do you find clients, etc. And I think that is something that we definitely can bring. Because we have existing distribution channels, we have this existing distribution networks, distribution partnerships, and we are in daily contact with 10,000s of clients, which is, I would say, a huge entry barrier for many of the startups. In terms of products and services, we very much look at how to better integrate and how to make our products much more simple to use for clients. It's a little bit a commonplace because I would think that virtually any company in the world today is talking about simplification and how to make the life of a customer much more easy. But for us, being in a highly transactional business, we have 10,000s of credit limit applications per day. So we are dealing with 10,000s of interactions with our clients per day. And so this whole automatization and integration is absolutely key for us. So in terms of products, we know that for particularly SMEs, financing is their number one concern. It's all about cash. And so anything we can help to ensure that their invoices are paid on time is key for them. We know, because it's at the heart of our own business, that one of the most frequent reasons for bankruptcy is that your key clients don't pay their invoices on time and or go bankrupt themselves. And so this domino effect is one of the key reasons why companies fail. And in order to have the courage and also the backing to develop your own business, this is definitely one of the, I would say, items on your balance sheet that absolutely need protection.
Okay, so blockchain. We asked the question in the last panel about blockchain. You guys are doing something or developing something using blockchain now. Can you share that?
Yep. So we are partnering with WeTrade, which is a consortium of a large number of banks, particularly looking at the KYC onboarding. Because also for us, as we act globally over the planet, KYC has become a major concern or a major, I would say, constraint or obligation for us. So blockchain can be a perfect tool to ensure that if one of the partners has done the KYC process, it can be reused by others on the same platform, using the same criteria, operating in the same territories. And because it was mentioned as well earlier, the cost of individual onboarding in the B2B space, and certainly when you're dealing with larger companies or companies that operate in many, many countries, is extremely costly. So in order to reduce that piece of the acquisition cost, blockchain can be an extremely helpful tool.
Excellent. So final words, culture is key, correct? And your company has embraced a culture of innovation, yes?
Absolutely.
Absolutely. So my time is out. Please give a big round of applause for the CEO of Euler Hermes, and everything they're doing to innovate in financial services. Thank you very much.